Hello, this is Stephen Pilkington with the Bogar Pilkington Group with Keller Williams. And today's topic is we're going to go over real estate markets and what's happening with the current real estate cycle. So now that we're into a new year, it's 2019. We finished off 2018, and even though the stock market had a bit of a dip at the end of the year, and everybody knows that the news is talking about real estate slowing down, we still did finish with 7.8% increase in value for the average home in the Denver metro area last year. Now, for your specific neighborhood, that means you might be as high as 14% up, or you might be as low as just a few percent gain. We're starting to see some shifts in the market so that each neighborhood now is starting to matter more than necessarily the whole of the Denver metro area. So overall, really good news for 2018 for pretty much every homeowner. Now, what does that mean for 2019? To be frank, we don't know 100%. We do know there's certain economists that tell us that Denver real estate might be flat this year, or it might be up just a little bit, that we might get between 3 to 4.5% gain in value this year, both of which could be great. And the reason I say that is real estate cycles. We always look towards what's happened in history. And while it's not going to be a 100% predictor of what's going to happen going forward, it gives us a good idea of what to look for. And for most of you who may not know what a typical real estate cycle means, the average real estate cycle has 4 phases. And within those 4 phases, that means starting at a top, and then the end of the cycle is when it hits the next top. So starting at a peak and ending at a peak. And for most cases, those real estate cycles are 7 years from peak to peak. And in Denver, our last peak was arguably end of 2005 to mid 2006. Well, last I checked, we're 2019 now. So we're looking at 13 years, or going on potentially 14 years, that we've been in now a positive cycle. And what happens after a peak, then gradually and then suddenly we hit a decline until we hit a bottom. And then at the bottom, that's when everybody should buy, and that's the best time to buy. And usually that's when no one does. And then we slowly start coming out, and then we start into that rise again. And then usually about halfway to 3/4 of the rise, that's when people are like, oh my gosh, now's a good time to buy. Well, we don't know exactly where we are. We just know that with 13 to 14 years in, we're starting to push our luck a little bit. So we're just advising to be prepared. And we're not sure what that's going to mean. Just know that when you're making an investment with real estate, we have to take into consideration that make sure this could be a longer term investment. And I hope I'm wrong on this, yet all the signs are pointing that we're going to have a good year this year, not great, and be prepared for what's to come. So in summary, we're still looking at positive stuff going on in real estate. There are a lot of factors that could determine if that changes between the economy or interest rates. Yet for now, overall, the ship is steady and things are flowing forward. So this sums up today's video blog. I'm Stephen Pilkington with the Bogar Pilkington Group. Thank you so much for tuning in today. If you have any questions, any comments, please leave it. Our information is down below. We'd love to hear from you. And if there's something you'd like us to speak about next time, let us know, and we'll get back to you with that. Have a great day.